Hello, Jim here. A great way to make extra income is by selling options. And the most important part of selling options is finding really good companies. Today I want to share with you how I find really good companies, what tools I like to use, what I like to look at, meaning profitability, debt, earnings, year over year, projections, those kinds of things. And I'm also going to share with you two that I found recently that I've been able to do some really good trades on. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and jump right in. Now, how do I find the companies that I like? One tool that I've gotten very used to using recently, I've been probably a member or a subscriber to them for over a year now, and that's Seeking Alpha. Now, one way I do like to find particular stocks is I'll look at their top stocks. Then a lot of times I keep it as simple as searching by quant ratings. So I look for who has the highest quant ratings or potentially who has the highest profitability. And then I can find different companies that I want to look at. Here you can see you got Delta Airlines. You've got quite a few different categories. You can even go and dig a little deeper. You might say, well, I want to also look at return on equity, and I want to find that companies that have the highest return on equity. So I've used this a lot with Seeking Alpha, and it's given me some opportunities to find some good companies. You can also do it with top ETFs. It has a similar way to look at it. Of course, you don't have as many details to dig into, compared to a company. You can look at debt, you can look at, financing, growth, all the different metrics, like different types of profitability or ways to measure profitability as well as growth. For ETFs, it's a little bit less, but I've found some pretty good ETFs here too. So once I identify a company, then the next steps I typically like to do is I like to come up here, and this is one particular company that I found recently, and I actually did my first trade on this company, AppLovin Corporation, which I also like their name. So I found them and I did a trade. I think it may have been around April 7th or 8th. Not my most profitable trade, but this is a company that, I'd really like to own. Now Friday they were way up. You can see here, almost up $5. So they've only recently started making money. They have not a crazy earnings per share or not a huge PE. And you can see all that information here. Here you've got a basic graph where you can, kind of look at how they've been doing. So here you can see they've only been around since 2021, and then, they went way up, and like a lot of these other companies have come down. Now, one thing I do, and I share this in my memberships, I will find good companies like this, and I might add them to my watch list, and they may be in my watch list for a number of years. Like I have several currently that I'm watching, but aren't making money. So I typically do not trade in any company that doesn't make money. So companies like Palantir have been in my watch list for a long time, and only recently, over the last year, maybe year and a half, have I started trading with them. And the same thing with this company, AppLovin Corporation. Next, I'll look at earnings year over year. I do really like to look at this, and you can see they've significantly beaten their earnings almost every time. This was only by 3 cents, but pretty significantly the other times. And you can see they're trending up nicely, and year over year, they're going to be up quite a bit in the second, third, and fourth quarters, especially the second and third quarters. And just keep in mind that a lot of times they, have lower projections, but then they, what they actually deliver is a lot higher. So this is one page I really like to look at. If they have dividends, I'll look at dividends. I'll look at growth. How are they growth wise? And you can get a lot of different metrics. You can see how are they doing year over year for revenue. You can also see it by income. Just again, another good page to look at and to get some more details. Then I also will look at profitability. Are they profitable? One of my favorites is return on common equity. And compared to the sector median or the industry average, they have a much higher return on equity, which to me is very important. There's been lots of studies that companies that have really high return on equity or return on capital, usually, both are up. If one is up, typically, like you see here, return on capital is a little bit less, but definitely good productivity. And then what I like to do is, I'll come over, I'll look at options, I'll see, and I just do it here temporarily until I look at someplace else. But I just see that they have enough, volume and quite a few strike prices, and they do. So it's pretty easy to make a trade with them. Now, something else I do, I'll look at charting, and you can do quite a bit of charting here. It has a lot of, you can compare it to other companies. You can compare it to the S&P 500. You can even add like averages and different categories. So it just works out really well. I find I use Seeking Alpha a lot. Another tool that I've started to use more recently is what I call Barchart. I signed up for their Premier subscription, and I've really liked this too. I'm still getting used to this tool, but it has some of the same kind of information. So here, I can look at charting. They have some really good charting here too. You can do all sorts of things. You can draw lines. You can also look at Barchart's opinion. So here they're 96 buy. They talk about why they suggest it's a buy. There's all sorts of detailed information, a lot to kind of take in. You can also look at price histories. They have a trader's cheat sheet, which has a lot of different statistics and information that you can look at, Fibonacci, moving averages, and, so there's a lot to deal with here. I'm not going to go into a lot of detail, but being a serious trader, it gives you information. It helps you identify, why this is a good company, why it's at a good buying point too. It's at a price that you're okay with spending the money on it. It also has options prices, and it does a little bit of a better job than Seeking Alpha. You also have volatility and Greeks. You've also got, it could talk about different types of strategies you might want to do. It's got news and headlines, key statistics. So this is very similar to Seeking Alpha. It's got different, debt to equity, which I do like to see that. They do have a bit more debt than I like, but it's a growing company, and they are paying down debt. So for AppLovin, I also like to go in here and go to Schwab and look at some of the same information. What I really like to look at with Schwab is if they have dividends. Schwab does a really good job of showing how dividends are going. And then I can see like they do have earnings coming up, I guess, in a week from Wednesday, I believe that is. And then you can see here too a nice graphical representation of the earnings. I like this area, peers and ratios comparison. So you can also get really good ideas. So, some of these other companies, PTC, FICO, and some of the others, I've also found some good names here that I'll add to my watch list, and then also look at making a trade in. One thing just to keep in mind, it may be a really good company. It may show really good, growth and profit margin, but sometimes they don't have the greatest option volume or strikes or premium. So that's one thing I typically like to do. Most of my investments these days they're optionable stocks or ETFs where I try to sell options on everything I own. And here you can see the balance sheet. So this is what I was talking about. They do have more debt than I prefer, but they are paying it down, and their cash flow is really good. If we go back to Seeking Alpha and go to profitability, you can also see the net income per employee, which I like to use. So you can see per employee, they're getting a big kick. They don't have many employees, so they're able to do it with fewer people, or to run their systems, and maybe have a smaller marketing team. The other thing I like to do, and I find it easier to do it from here, I can click on AppLovin and I can actually go to their website and see what they provide. And I'm also in the past have been an app developer, and so this is something I could definitely use, and the reviews have been really good. So, something to kind of keep in mind. So those are the main things I use. Once I identify, wow, this is a good enough company, then I do add it to my watch list, which is typically here. I primarily keep them within Schwab, and I have a favorite stocks and a favorite ETFs, and I try to keep it really simple. Now let's look at the trade that I made with them, and I believe, yeah, here it is, AppLovin. This was back on the 18th of April, so about a week ago, a little more than a week ago. It was in my Fidelity IRA. I did a vertical put credit spread, 57.50, 47. At the time, it was 69.50, and it's, how did I do? I brought in 313. I am looking at the right one, aren't I? Yeah, 313. So I did well with it, and it stayed so far. It stayed out of the money. The expiration, my guess is this will probably expire out of the money. I might need to take more risk, especially since I really want to own it. I could see this being another company like an Apple, or it might get acquired by an Apple or someone else due to their ability to really, promote the different apps and stuff. So that's what I wanted to share with you on that. And then my other company that I'm looking at that I've also done a trade is Pure Storage. And again, another technology company. Let's come back over here to summary. And you can see the price has gone up, but again, its earnings are going up quite, quickly. So it does have a little bit of a higher PE, but I think it's warranted because of their growth rate. They're not growing huge, but they do have really good income. Now, earnings, we can look here, and you can see they're going to have a big increase first quarter, second quarter, a little bit of one. Third quarter, it is going to come down a little bit. So it's not bad. And remember, they under promise and over deliver. So they typically beat their earnings. Here they beat it by quite a bit. Same thing with the fourth quarter. So I typically, like I said, look at that. If they have dividends, I look to see what they're paying dividend wise. They currently don't pay dividends. I look at growth. So they have pretty good growth, nothing like AppLovin or APP, but still quite good. Still considered a growth company, probably more of a slow growth company. And then profitability is a B plus, but their return on equity, common equity, is better than the industry average or the sector median, and it's also return on capital is better. So their productivity is really good, but not great. Again, APP is a little bit better. Also, if I look at options, I can see that they have quite a bit of volume and quite a few strike prices, which makes it nice. And then one other thing I'd like to share is peers. A lot of times I'll get ideas here, just like in Schwab, I can look to see, who are some of their competitors. This is another company, NetApp, that I also like to trade in. And then I can come down and I can compare it. Now, their quant rating isn't as good as some of the other companies that I've dealt with. And the valuation, they may look at it as being a little bit higher price. But again, if you're selling puts and you pick a lower strike price, then you're typically okay with that. Now, let's look at Schwab. Let's go back into research tools. And I believe this is Pure Storage. Again, you can go out to their company, and I encourage you to do that, especially with some of these companies. I've been able to download their products and really take a look to see what's going on. Overpriced, not really. If we look at 3 years, they've been increasing. They had a big jump when they had last earnings. So let's see when their earnings are. Their next earnings is 5/29, so almost a month away. So we got a little bit of time for earnings. But here again, you can see graphically how they're increasing. And here's their PE. But again, if they blow out their earnings, maybe the PE is actually a little bit lower than this. And again, you can get ideas. You can look at other peers and ratios. And then down here, you can see they've been paying off debt. So as of 2021, 2022, they had been increasing debt. Now they massively cut it. So they're down to $104 million of debt. So, and that's also because of really good cash flow. I mean, for their storage products are huge in demand, especially with the fact that AI uses so much memory, as well as I believe the whole data mining thing also takes up crazy amounts of memory. So we could jump out to their site real quick, but they have an interesting site, well done, and you can look at their products. So they offer a lot: unstructured data storage, unified block, and they work with Azure, they work with Amazon Web Services, I believe also the Google Cloud. So they offer quite a bit. Now, if we take a look at the trade I had with them, which I believe, here's Pure Storage. This was back on April 9th. Again, Fidelity IRA. I'm doing most of my trading in my Fidelity IRA account. I will be 59 and a half in about exactly a year from now. I believe May of next year, I'll be 59 and a half, where I'll be able to access the funds in my IRA if I need them. Now, if I don't need them, I'm probably going to leave them alone and not do anything. So this was a vertical credit spread, 45.37, where there's two strikes, 21 delta. At that time, it was a $52 price, which I think it's pretty close to that currently. Let's see, 53.06. So it's still, you could still make this trade. I didn't bring in as much premium because I did go out to 621, mainly because I wanted a lower strike price. And I used a smaller spread, but picked up, it's like an 87% yearly return. So the one right before that is, again, one of my other favorite companies, which is Shopify. And this was my first trade in them. So it worked out really well. Again, these are two companies that I primarily found these two through Seeking Alpha. But again, Barchart I'm getting more used to it. I think I found my first stock with it. It also, on its main page, I think it has 100 top stocks. And it does have a really nice, up here, it does have details and things you can look up. And I really like their option screener that I'm using. If you're interested in either of these tools, I am an affiliate. I will get a kickback if you sign up for them, past the trial period. It's, they provide a little bit of a kickback. It doesn't change what you pay. I believe for this, you get it free for a month. They don't give any kind of discounts really. And in Seeking Alpha, if you go through the link, I think it's a week free, and I think they reduce it to like $199 or something. Details, again, will be in the description. And as always, if you want to take a look at my memberships, they've been growing. I've had a number of people join recently. I've had some pretty advanced people actually join my Discord, and they're answering questions and working with some of the newer people to help them kind of get going. I am no longer offering a 1 week free for any of the memberships that include Discord. I've had spammers getting onto my Discord as well as imposters, so I've turned that off. I figured out that some of them were coming that way. So I do have 1 week free for my lowest tier, which does not include Discord. So take a look. It may be worth your while, may not. And as always, if you have questions, comments, you want to add a stock or, ETF that you want me to take a look at, please leave it in the comments. And as always, thanks for watching. I look forward to seeing you next time.